Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some stocks on the move today. John Tucker looks at American stocks, not Taiwanese stocks.
And let's start with United Parcel Service. They deliver. They smashed Wall Street profit expectations, and they did it by cutting costs and unfortunately by eliminating 34,000 jobs this year. This is the cut to its permanent operational workforce, and that includes delivery drivers, package handlers. It's actually a 70% increase from the previous layoff target that we heard about. As part of the cost-saving initiative, they've closed daily operations at 93 leased and owned buildings. The results suggest that the CEO revival efforts are gaining traction. You know, they struggled with slow demand, high expenses, all because of the uncertainty that was fueled by the Trump tariffs. The parcel industry facing pretty significant challenges this year because of the disruptions to the international commerce market. Matt Maley over at Miller Tabak says this is exactly what UPS had needed. The company's trying to remove also less profitable business from the network, such as the e-commerce. It doesn't make them much money at all when they deliver packages for Amazon.
Help me here, Scarlett. My scientific analysis is I'm drowning in cardboard boxes where I live. It gets bigger and bigger.
Well, the packaging.
The parcel thing.
Yeah, absolutely. The stock, by the way, really being rewarded for these latest efforts. 10% of its staff, approximately, when you look at the 34,000 jobs as opposed to the overall size of its workforce.
Remember, they had a pretty big labor contract with the Teamsters union, so you can lay some of that on that contract.
Next.
One quarter doesn't necessarily make a trend, but remember where they were earlier this year? We're talking about UnitedHealth Group. It looked like a disaster story. They have beat Wall Street expectations for third quarter earnings, also raising the outlook for this year. So the health conglomerate may have stabilized after that major meltdown. They're planning for what they call durable and accelerating growth in 2026. Adjusted profit in the third quarter, $2.92 a share. So that's slightly above the average analyst estimate. UnitedHealth trying to win back investors' confidence. They slashed the earnings forecast, replaced top management, disclosed a federal criminal probe earlier this year, blindsided by higher than anticipated costs, especially in the Medicare business. You remember all this turmoil. It seemed to start to unfold in the wake of the shooting of Brian Thompson late last year.
And on top of that, Medicaid's going to be a problem for these health insurers.
The industry has pledged to change some of the practices, and who knows where
Get
we
one
go
more
from
in
here.
You got Amazon?
Let's do real quick. So this is it seems like a common theme. Amazon going to eliminate roughly 14,000 corporate jobs after Andy Jassy warned AI is going to shrink the company's workforce. This is the second round of reductions in about as many years, and it was an fascinating conversation with Bob Kaplan because he pretty much had said AI reductions, productivity gains, which are essential for the economy, but those people who get laid off as a result of it, I mean, is that going to fuel the next wave of populism that started, back in the Clinton administration with globalization?
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.